Hello, everybody. It's Jason from MAPsignals. What time is it? It's time for the best ETFs to buy for October. Before we get into it, let's ask you politely, please hit that like and subscribe button. Help us bring you more of what you're looking for and help us with questions and comments. So with that out of the way, let's get to this video generously brought to you by MAPsignals. I'm going to go ahead and share my screen and let's get to it. Listen, when I pick the best ETFs to buy, I need to go over the market really quickly. So here I'm at mapsignals.com. I'm at our new portal. Paid users, you can log in and follow along with me. I like to check in really quickly with what the big money is doing. So let's go ahead and look at our one-year chart of the big money index. As I went over last time, it started falling here in February and just really has been chop city ever since. But what's interesting is looking at it versus the SPY, it's just been rising. And as I went over last time, the 5 biggest stocks account for 25% of the weight of the S&P 500. That's Amazon, Apple, Microsoft, Google, and Facebook. So just 5 stocks, 1% of stocks are propping up that whole index. Finally, over here, it started to cave, but you can really see the correlation of this big money index when we switch it over to the IWM, which is the Russell 2000 tracking ETF. So when we look at that, we see a perfectly, as soon as that big money index fell, we got chop city over here, and it's still chop city. Markets are topsy-turvy, a lot of rotations. They're buying tech and then they're selling tech, and it's really kind of gut twisting. So what are we to do? Well, again, helps to understand what the big money is doing. It's a bit of a washing machine out there. What's up one week is down the next. We can see that here again with the big money stock buys and sells. A lot of choppy activity lines up with this sideways activity of the Russell 2000. Look, we love trending markets when you get clear indications like here, the pandemic, that monstrous selling gave way to huge buying, and we love to see uptrends like that. We're just not quite there yet. So with that as our backdrop, I'm going to go over here and share with you our list of ETFs ranked at MAPsignals. We take all the constituents of the stocks, we score them for an overall score, a technical score, and a fundamental score to get overall strength of the stock on both a technical and fundamental level. And then we apply their weightings as they are in the ETF to give you a score of the ETF. So here you're looking, and what do you notice? A ton of energy. Look at all this energy right at the top of the list. But over here, if we move my mug, you'll see fundamental weakness. So all these stocks are not making tons of money. They're not very profitable. A lot of them have a lot of debt, yet technically they're very extended. Everybody's buying them. That to me screams a lot of short covering, a lot of forced buying. People have to buy this stuff. It's not necessarily buying it for its quality. So I'm staying away from that stuff right now, as tempting as it may be. So this is the rest of the list here, and we're just going to go over them one by one. So let's get to our stocks, our ETFs rather. And go back over here in the portal. We're going to type them in one by one. So our very first one is KRE. That is the Regional Banking ETF, the SPDR S&P Regional Banking ETF. It tracks an index of banking and financials, but really focuses on the regional banks, which would potentially benefit from an imminent rate rise whenever it happens. But that's what this positioning looks like. Again, you saw a lot of strong big money buying, a couple of sell signals in July in the summer. All of a sudden it's met with buying again. Why I like this ETF is we see this big money support, and it's also got some really interesting stocks in here like SVB Financial Group. It's only seen recent big money buying, but it scores very strong in technicals and fundamentals. It's rising. And also First Bancorp is another strong stock here that I like. A lot of big money buying, scores pretty well again. So if you want regional banking and it seems like big money is flowing in, that's a great place to do it. Let's look at one that I own now in managed accounts. That is IWF. This is the Russell 1000 Growth ETF. Now, why this is interesting to me is this is really heavily focused on a lot of those big caps I just talked about. These are the largest stocks in the Russell. So they take the largest large cap and mid cap stocks and they isolate those. Because this recent breakdown has occurred of the big tech stocks, and you saw it in names like Facebook yesterday, which went on offline for like 5 hours, freaking out the world, right? Well, they've been discounted. A lot of those stocks have come in heavily, and we're seeing that here. So it's a good opportunity to potentially buy for the longer term investor. And again, while it focuses on larger stocks, it still has that growth component of the Russell 1000. So, what's an example stock that I love there is Intuitive Surgical, ISRG. It just split 3-for-1. This has been, one of those barn burner stocks. You see big money buying fairly recently, not in the past couple of months, but what I want you to pay attention to, look at all the times on our top 20 report. The first time it appeared way back here in, what was it, 2005? November of 2004, it's up 3,100%. That's the type of stock we like, and IWF holds it amongst many others. Another one you may think boring, Qs, triple Qs, okay? It's the Invesco QQQ Trust. It tracks the NASDAQ index. Same sort of story as IWF. Look, it's pulled back so much. We were at 381 September 7th. Here we are 1 month later. We're at 352. I mean, that's, nearly a 10% pullback. This is the Dow Jones of the 1920s. These are the best tech stocks, growth stocks, everything right in one convenient index. Obviously, it's been a massive leader for years. You explode this out. I don't really have to show you. Look at what that chart looks like. Very intense. What stocks are in there? Hey, Microsoft, maybe you heard of it. I'm on a Microsoft computer right now. Our database runs on a Microsoft product called Microsoft Azure, their cloud business. Also, maybe a little stock, Apple. Maybe you heard of that one. I might as well type the ticker, right? A phenomenal stock. Again, let's look at the top 20 appearances. Monster. Again, since around the same time as that ISRG, it's up 6,300% since December 5th of 2005. Moving on. XLB. What is that? That's the materials ETF. It's kind of boring, but again, great stocks in here, and it's just been getting pounded for a few months, and I'm looking for some of that bargain component. So the first few ETFs were off the top of the list, really scoring strongly. I'm looking for weaker ones too, where we can find, strong fundamental scores and weak technical scores. When we see selling on that, it's usually an opportunity. Maybe not immediate term, but longer term for the longer term investor. XLB holds some, really solid stocks like Sherwin-Williams. Okay, they've had to restate guidance recently. They're suffering a little on the pressure side. But, you look at this stock over the long run. Look at that. Oh, goodness. I wouldn't bet against that. And looking on a top 20 basis, again, this stock appeared way back when in the early 2000s. I'm scrolling down here. It first appeared November 19th of 2001, 4,130%. Again, when stocks appear on our top 20 report, and they do it over and over again, they typically have the juice. So our final ETF to buy for October is IBB. Some of you may not get excited when you hear biotech. Maybe it feels risky. Maybe it feels volatile. You're not wrong. It is a volatile space, but it's still in a multi-year uptrend. And if we look at this 1-year chart again, you see a monster drop. Why? Well, last Friday, Merck came out and said, hey, we got a pill for COVID that reduces hospitalization and death by 50%. So what do the macro funds out there or knee-jerk reaction investors do? They sell the big vaccine manufacturers, but vaccines still got to get into people's arms. We're going to roll out boosters. Kids are likely going to be approved for it soon. So, just because you get this one headline, it doesn't mean it's going to stop Moderna, right? Everybody knows that name. Look how much it's fallen down. And of course, BioNTech, which was integral in the Pfizer vaccine, same sort of story. So those hold those stocks. And again, you look for the long-term trend here in ETFs because it's basically like a passive investment, but by picking certain themes and sectors, we have a better chance of focusing our investment. So there you have it. The best ETFs to buy for October. Again, I own IWF and managed accounts. Got to disclose that. If you like what you see, like and subscribe. And again, give us questions, comments, suggestions, and I will see you next time. Thanks for tuning in. Talk soon. Bye-bye.